Hey, everybody, Brian Bogner along with Greg Towner here, and we're excited to bring you our second ever parallel portfolio podcast. Now, when we came to you a month ago, we didn't have a name for this podcast, but we actually have come up with a name now, and we're excited to reveal to you. So, drum roll. The new name for the parallel podcast is the 20-minute market breakdown. The 20-minute market breakdown. Now, does that mean we'll be right at 20 minutes? Heck no. We might be 25 minutes, 22 minutes, 28 minutes, who knows? But our goal for this is to be in the 20s. Greg and I both started our timers here. I think last week we said, oh, this will be 15 minutes, and we ended up going 30. So I'm going to stop talking about this now because we got to get to the important stuff. So let's go ahead and get to the important stuff, Greg. I know we like to start this stuff with just some, anecdotal stories about stuff that we're experiencing as we are out and about and doing things, and it's also pertinent to the markets and things like that. So why don't you go first and share what you got there, bud?
Yeah, absolutely. Happy to. I had the opportunity recently to spend a few days up in the Adirondack Mountains, upstate New York. It was a lot of fun. My brother was competing in a woodsman competition with the other
Wow.
lumberjacks, and he got first place in the axe throw. So watch out for the towners when they have an axe in their hand.
Woo.
So that was a lot of fun. But what was interesting there is, it actually took us. We booked our hotel ahead of time, but it was very hard to find a place available. It's a big tourist
Mm.
area. Everybody was traveling there. And then as we went around there, what was amazing, and this is a huge region, other than the tourism, it's pretty slow economically. Population
Mhm.
growth is flat, probably even down over the years. But everywhere I looked, now hiring signs. There was
Mm.
jobs everywhere. And not just at the little local ice cream stand that we went to. These
Mhm.
were at, schools, government buildings, a variety of
Mm.
small businesses. So it was nice to see there's still demand for employees that, when you're out there seeing the signs
Right.
aligns with the government numbers that we're seeing more broadly. So that was good to see.
Yeah. Well, my story is pretty similar. Last
Okay.
weekend, in my neighborhood, we a bunch of us decided to head up. So, here in Greenville, we decided to head up to the Disney World of Breweries. Okay, which is, as you know, here in the upstate, it's Sierra Nevada Brewery, and we're like, you know what? Let's go up on a Saturday. We'll go up in the middle of the afternoon. They got live music out there, and we'll listen to some live music, have a beer or two, and then go have dinner in the restaurant. Which the restaurant there, it's not like a fine dining place. It's just small plates and things like that. We'll go up
Yeah.
there. Well, this past Saturday, I mean, as you well know, here in the Southeast, anytime in the afternoon, it's just like storm after storm after storm after storm, right?
Right.
So we start driving up. I think we left at 1:30, and sure enough, I mean, all these storms just started coming in and things like that. Well, we get there and it's about to just dump in terms of rain, and we get inside and we're like, well, let's go ahead and put our name in the restaurant, right? And actually, as we were driving in the parking lot there, it was completely packed out. I had to drive around a little bit to find a space, but people were coming out because they knew the rain was coming, so they were leaving. So there were actually people
Okay.
leaving the place. We get there
Right.
and we put our name in, and it's a 2.5 hour wait
Oh,
for the restaurant.
oh wow.
2.5 hour wait, and people are leaving. Okay. So
Uh,
we find a table upstairs inside, and and there's 8 of us. And we're sitting there and we're just kind of drinking and this and that. The rain pops down, a band comes up. We go out for a little bit, listen to the band, rain comes back, we go back inside, this and that. Well, thankfully, it didn't take 2.5 hours. It took about 2 hours for us to get our table. So
okay.
they called us in 2 hours. We went, sat at the table, this and that, and then we had dinner and whatnot. And I asked the waiter, I said, "Hey, is this a busy Saturday for you?" And he was like, "No, actually, this is kind of slow." He's like, you got your table in 2 hours? And I was like, "Yeah." And he's like, "Man, like
Wow.
like like on a normal Saturday, if the weather's nice up here, it's like, I mean,
Yeah.
it's just forever to get your table on." And I just started thinking, like, how does this relate? Again, right? We manage money. So anything I go through, I'm always thinking about, okay, how does this relate to the markets? How does it relate to this, that? But
Sure.
people are employed and they're spending money. And
Yeah.
you know, whether it's in the Adirondack Mountains in upstate New York, right out in the middle of nowhere, or
Right.
Sierra Nevada Brewery, where all these people, the Disney World of breweries or anything like that. People right now are traveling and going places and engaging and spending money. There was a bridal party there with 20
Okay.
people. They all had matching t-shirts, 20 women, a bridal party that was there, drinking the beer. So anyway, I share that to
Wow.
say that, yeah, I mean, in our last call, excuse me, our last podcast we answered, we dealt with the question, are we in a recession? Right.
Right.
And,
Yeah.
you know, and I think we need to adjust that a little bit, right? In terms of, what are we in? What exactly are we in or not in? And I think that, is the economy really slowing down right now? Is it really like, oh, it's just so overshot and it's just slowing down and oh my gosh, we got those things? Or are we just normalizing to some type of
Mm, hmm.
normal growth that, pre-COVID? But
Right.
share your thoughts on that. What do you think about that?
Yeah, I mean, I agree. I think investors and just people in general need to stay a little more open-minded because it's kind of they're thinking, well, we're either going to be in a recession or we're not, or they're just thinking we are in a recession or we're going to be in one. And clearly we're not in one now based on some of the data we're seeing and then the employment
Right,
numbers that we can talk more
right.
about. Will we be in one in the future? I don't know. But like you said, things got so distorted over the last couple of years, right? Through the pandemic. Maybe we're
Hmm.
just normalizing back to where things would have been if we could go back to 2019 and kind of keep operating normally, so to speak. So much changed from the pandemic.
Right.
So everything shut down, right? The economies worldwide shut down intentionally for a brief period there. Everything was locked down in a recession. And then all of a sudden it opened back up and everybody wanted to spend. They had their stimulus money.
Right.
Through the supply chains just got all thrown off because all these companies just stopped making everything. Then all of a sudden had to quickly restart. That was difficult.
Hmm.
Supply chains got backed up. It's just a real mess. And then everybody was spending on the same things. Everybody wanted to buy things for their home.
Mm.
They wanted to build a new home
Right.
office.
Right.
Everybody that was doing all e-commerce, even people that had never ordered online, were now doing everything e-commerce. So all these companies thought all this demand was, permanent. It was really just shifting. A lot was shifting, and now we think maybe that some of that is readjusting. It's not as if things are really slowing down necessarily. It's just shifting. Spending is shifting to other areas. You no longer need
Right.
to build a new home office. Instead, you're going out to the brewery and spending some money, or you're going
Exactly.
on vacation. So, things are normalizing, as you
Right.
said,
Right.
back to what they could have been if we were just simply, 2, 3 years out from 2019, as opposed to trying to get out of this pandemic of the
Right.
last couple of years.
And I think your experience in the Adirondacks is interesting, right? Because I mean, even when I talk to a lot of my clients who are business owners, and it doesn't matter. I mean, they could be in the service industry, they could be in manufacturing, whatever. It's like, what's your biggest hurdle? What's your pain point? What are you dealing with? I got to find good people. I need to hire.
Yeah.
I got to find people. Like we are, we're booked out for the next 12 months, 18 months, this and that,
Right.
but I don't have enough people to do this. Right. So,
Yeah.
and I think the employment numbers that we had recently, right? We're now back to pre-COVID levels in terms
Right.
of employment. Right. So, you know, it's like everyone's got this mindset of like, oh, the market's crashing, we're about to enter recession, everything's going that, and it's like, well, everybody's still working. They're
Right.
making actually, we've seen a lot of payroll numbers and things like that really get adjusted up due to a lot of
Right.
inflationary issues and things like that. And there's money being spent, and it's kind of like we're scratching our head, going, is this really recessionary, right?
Right. Yeah, the unemployment is at 3.6%. I
Right.
mean, that's the best since all the way back to the 1960s. So the job numbers are great. Now, of course, those are lagging numbers. They may worsen a little bit. They
Hmm.
probably will worsen a little bit. I can't imagine they
Right.
get better
Right.
from there. I mean, yeah, and we are starting to see some little notices of layoffs, but it's usually in some of those companies that like we said, had really built out for this
Right.
huge expectation of this monstrous growth. And then they realized, oh, actually, we were just pulling forward growth and now it's more normal. So they're having to right size their staff a little bit, or maybe they were in real speculative areas. I will say I am seeing a number of comments from from corporations that saying, hey, maybe we could stand to get rid of a handful of employees, but we just spend a lot of time and money training these people. We don't want to
Mhm.
get rid
Mhm.
of them only to have to, 6 months later, rehire more people. So I
Right.
think you're going to
Right.
see companies hold on to the good people that they've hired, unless things got, considerably worse, of course. So employment situation is strong. There's no question about that.
Yeah, I mean, I think it's important to say that, we're not saying that recession could, I mean, it could still happen. All right, like
Oh,
a
sure.
real recession or a real slowdown. That's not,
Right.
I mean, that could definitely happen, but it's just, again, we look out certain time frames, right? In terms of, first of all, we don't predict the future,
Right.
but we take what the data points that we know now, and then we look out, 6 months, maybe 12 months tops, because we just, again, you don't know. There's so many variables and so many things changing. But I think the important thing is that based on what we're seeing right now, today, um, we live in a consumer-based economy. And
That's
I don't know
for
what the
sure.
number is. Is it 65%, 70%, 68%, somewhere in there in terms of like the actual impact of the consumer in the economy. But the point is it's pretty dang high, right?
Yeah, absolutely.
Yeah. So
And
go ahead.
I think a lot of, to more things that are normalizing. I mean, the supply chain, we talked about how it was such a mess at the
Right.
onset of the pandemic. That I'm not going to, claim it's all fixed, but it is certainly
Right.
improving vastly. We're no longer seeing headline stories about ports backed up in LA and all over the place. Things are getting to where they need to be, more so.
Mhm.
Not
Mhm.
completely normalized, but we're
Right.
getting there. Commodity prices, those have come down
Right.
across the board a lot back to where they might be if growth was more normal. And obviously, we're still dealing with a lot of things going on with Ukraine and Russia that's affecting things, but more normal. We're getting more normal as opposed to what we've been through the last couple of years.
Well, let's talk about that because I know this morning, we're recording this here on Wednesday, August 10th. But this morning, some CPI numbers came out, right? Some inflationary numbers.
Yeah,
But yeah, I mean, we said this on the last call. We firmly believe inflation has peaked, and the numbers seemed to confirm that. But let's talk a little bit about that peak in inflation. And
right.
it's still high, but
Sure.
it going higher is likely not going to happen.
I mean, the market, what does the market look at? It doesn't necessarily look so much at absolute numbers. It doesn't look at
Right.
the, 8.5%. It wants to know what is the direction things are trending. Is it getting better? Is it getting worse? And so right now, even though inflation on an absolute basis still has this big, scary number with an
Right.
eight handle on it, it's heading in the right direction at this point. So the market likes that, at least here so far. A lot of the improvement came in the energy side, the
Mhm.
commodities that we just talked about. Some auto pricing came down. Rents, apartment rents are still a sticky point. That's a problem
Mhm.
for the
Mhm.
inflation numbers as we look out over the next number of months for sure. But we do think inflation has probably peaked. Now, I will say it's probably a good chance inflation is not going to be going back to that 2% we're so comfortable with for many, many years, right? I mean, I could definitely see a scenario where we eventually plateau down at a level higher than where we were previously for a
Right.
variety of reasons that we'll get into down the road at another conversation. But
Right.
so I think inflation has peaked, but it doesn't mean it's going to come hurtling down to extremely low level. And if it does, that's probably because we're in a bad recession. We want it to come down at a
Right.
semi-reasonable rate, right? Not come crashing down.
Right. But I think you bring up
Yeah.
a good point. Like, if we really think about '08 to where we are today, right? That's a, 14-year period. We
Right.
had such low interest rates for so long, and we had, I mean, even overseas, right? Europe had negative rates for those times and things like that. We've had this,
Right.
and
Yeah.
I think a lot of people are like, well, this is the new normal. And I think what's happening is no, this is the new normal. This was an outlier, and things are like starting to normalize. This kind of gets back to what we're
Right.
talking about, right? Normalizing growth. And that probably means that rates will be higher, right? And that means
Yeah.
mortgage rates and cost of capital and things like that will be higher because they were artificially pushed down for so long, right? And it created this
Right.
kind of inflationary boom, and now things are starting to correct. Here's the thing, right? Do we know where everything's going to land and settle? We don't. We just don't.
No.
So
No.
so like, to say that, well, I know that this area in the market and this area in the market and that area in the market is going to boom, 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 boom. I still think it's a little too early for that. But people that are calling for the market to just, I mean, and I see it, I read it. We get tons of reports and things like that from all over the place. And there's it's interesting. There's a lot of the analysts and things like that. We're starting to see it really go out a lot in terms of
Yeah,
the spectrum. It's getting really wide from people that are like, oh my gosh, bullish as ever, to just people like it's the end of the
right.
world, whereas
Yeah,
like, rewind, pre-COVID, and kind of everyone was in the same playground together,
right.
just kind of agreeing to the same thing.
Yeah, there's no question this is a difficult period to try to
Yeah.
analyze what the future holds. I mean, I won't deny that at all, and I think that's indicative of how difficult predicting is anytime, but
Right.
particularly now. I mean, I think it's important to do analysis and try to think of some ways that things can evolve to stay open-minded to different outcomes,
Mhm.
but not to just make some all-in prediction. And then
Right.
because when you do that, not only is it hard to do it, but usually you get your mind set on one track and then you're just stuck on that. And you're
Right.
not paying attention to when data changes, when evidence changes in some way. If you're stuck on some prediction, it's hard for most people to change their views.
Yeah.
And so to us, we of course have views on how things might evolve and we do some analysis on that, but we try to, have to stick to those kind of loosely as evidence changes, right?
Absolutely. I mean, it's, when you get married to a market opinion, or you get married to something, eventually you will be right.
Right,
It might be next month. It might be 5 years from now, but you probably will
right,
be right here at some point, right? And that,
right.
you're exactly right. That is, and that's why we're rules based. That's why we do what we do here at Parallel, where we have a system, we have a process, so that, yes, do we do top down analysis to see, okay, what's the overall market doing? What areas are expanding and not doing so well, and things like that. And we
Right,
kind of create this filter that we're always working through to determine, what are we buying, what are we selling, what are we overweight, what are we underweight, things like that. But
for sure.
you can't just marry yourself to something and then just hold on and be like, no, this is the thing.
Yeah,
That's a very dangerous place to be. So,
yeah.
all right. So normalizing growth versus a real slowdown. I think that is probably our main message for the parallel market 20-minute market breakdown. All right. We need to probably say that more and more throughout our progress. The 20-minute
All right.
market breakdown. So we're at about 18 minutes here. So why don't we go ahead and just shift a little bit? And I know that whenever we close out our podcast here, we like to share a couple things. Just some recommendations, kind of like, I always like just some type of action item or next step or something like that. So
Right.
why don't you want to go first?
Yeah, yeah, I can go first. Let me start with something on the investment side.
Okay.
We talked about this a little bit back, I don't know, maybe spring, early summer, but I want to go into it a little bit more. The Series I bonds that people are maybe seeing in the news a lot. Normally, we say avoid the news and avoid,
Right.
all these
Right.
headlines, but this is a case where this is pretty interesting. We've been positive on these Series I bonds. You might call them inflation bonds. A lot of peculiarities to them. We won't get into all the details here. You can let us know if you want to talk more about it. But basically, you can put $10,000 per person per calendar year into these I bonds, and they're currently yielding over 9% for the
Wow.
next 6 months. That's an annualized rate. There's a lot of other rules around them. You have to hold them for a year. You can only do it through the government website, on and on. But there's not often you can get, such a high rate at a guaranteed, that you're guaranteed to get. And that's because, the inflation is high and that rate's going to reset and it's probably going to come down. But those I bonds are pretty interesting. Only $10,000 in it. It's not going to change your life or your
Right.
retirement income.
Right.
But hey, every little bit helps. And we think, maybe being
Yeah.
proactive with that. So to learn more about it, definitely let us know and we'll help you with that. But,
Absolutely.
you know, aside from the investment side, I think last time I recommended watching the Tour de France. And so I'm going to stick with another kind of off the beaten path televised sporting event right now is the Little League World Series. I love watching this time of year. It's great. Right now it's the regionals. I
Yeah.
think next week they go into the finals in Williamsport, Pennsylvania. I've been by that area many times. Really nice area. And it's just great to watch these kids. If you're kind of a little burned out on some things going on in pro sports or college sports, which are almost pro these days.
Right.
But watch this little league, the sportsmanship, the camaraderie, that's just the fun, the joy they have, the goofy kids and the nicknames they have. It's just a fun thing to watch. So maybe give that a try. Little League World Series.
I love it. I love it. All right. I'm gonna start with my fun one first. And
Okay.
I think last time I talked about watching that F1 series documentary there on Netflix, but this time my recommendation is getting you out of the house, and
Mm,
it's really primarily around people who live here in the upstate.
okay.
I want to recommend a hike to you, and it is one of my favorites. And this is the time of year. Actually, this is the time for the next 2 months. So, well, 3 months, I'll say September, October, November, September and October, and here in August are really the times to go. But it's on the Blue Ridge Parkway. It's just north of Brevard. It's called Black Balsam Bald. It's a very short hike that takes you up to over 6,000 feet. So
Ooh.
you drive up there, and you're pretty high up. Park the car, and then you get on the Art Loeb Trail, and it's straight up, but it's not long at all. It's maybe a mile at the most. I mean,
Mm,
you can take your time, and there's plenty of places to sit, and you get up top. But here's the beauty of it: there are no trees up there. This place got, if you look at the history, I think there was like deforest. They logged it, and then it burned and all these other things, but it's just grass up there. So it's
okay.
very rare in the Appalachian Mountains for you to be on top of a mountain and have 360-degree views. But the beauty of it, because it's over 6,000 feet up, it's 95, hot degrees here in Greenville. You drive up there and it's like 70 degrees
Mm,
and it's gorgeous, and the
mm,
humidity's down a bunch, and it's really nice. I'm actually taking a client there here in a couple of weeks,
mm.
and I'm really excited about getting up there and doing that. So if over the next few weeks it's something you're interested in, give me a call here at the office. I'm happy to tell you where to go. You can park. They even have bathrooms there. I mean, it's really nice, and it's a great place to go there. So Black
Sounds
Balsam
great.
Bald on the Blue Ridge Parkway. Now, for the investment thing, I'm gonna talk a little bit about, we're entering, I don't know if you're aware of this, Greg. I mean, it's not like it's in the news or anything like that, but coming up here in November, there's going to be an election, right? And so
I've
there's a
heard
lot
of
of
that. Yeah.
political stuff that's starting to bubble up right now. And here at Parallel, we don't, we're not taking political positions or anything like that. And I think that's important, that as we enter this political season, and the reason why I bring this up is because when I talk to clients, a lot of times we'll be talking about the markets and this and that, and this and that. And 9 times out of 10, I'll hear something like, well, we got this election coming up. And if so and so gets elected, or if this gets elected, or if this happens, or the House goes Democrat or Republican, or this person, this and that, this and, well, I mean, everything's just going to go to pot at that
Mm,
point. If I had a dollar, Greg, and I'm not kidding you, if I had a dollar for the amount of times I heard, if Joe Biden wins this election, the market is going to
mm,
crash. If I had a dollar for that,
mm.
I wouldn't be doing this podcast right now. I'd be retired and other, right? Joe Biden got elected, right? 2021 was actually a great year in the market. 2022, right? This year's not so much, but I mean, it's not, historically anything
Right.
crazy.
Even
So,
2020 was good despite everything going on.
yeah, yeah. In spite of COVID and everything happened, 2020 was a great year. My point is this: be very careful about tying the political situation to the market. Does it matter? Absolutely, it does. Rarely, though, does it matter in the way you think it does, or the effect. There's so many other things that affect the market: interest rates, Fed policy, currencies, just consumer behavior, consumer sentiment, investor sentiment, investment. Like, there's all these other things that affect the market, and to just focus in like on one thing and say that, well, if this person gets elected or this party wins. So I just want to encourage you, as we close this podcast out today, if as we enter this political season, just make sure you've got a system, you've got a process in place like we do here at Parallel, and that is driving your decisions, not a person or who's elected or this or that. That there's something bigger than that that's making these decisions for you on the investment side. So I want to thank you so much for listening today. If you've got any questions or comments, you know how to reach us. You can email us. You can call us here at the office. We're happy to talk through all of the things that we talked about today with you. So thanks so much for listening, and we'll talk to you next month. Bye now.
Thank you.